earlier. I thought it was an interesting question. Did anyone notice bad UK PMI numbers and then the British pound skyrocketed? Okay, I want to comment on that. You have to put everything into context. It's a little bit of fundamentals. It's a little bit about market sentiment. It's a little bit about front running. But when the UK was selling to its people Brexit, they said it's not going to affect the UK negatively, right? And just in the short time of walking around talking about Brexit and going to Europe and negotiating Brexit, so on and so forth, guess what happened? Negative impact. You know the negative impact they said would not happen if they actually did the Brexit? All of a sudden, what happened was, just in the short period of time of talking about it, we lost 3 years of productivity. Kind of bad, right? So how does the market read this? The market reads this, that Brexit won't be able to be done. Okay? You see? So if just talking about it is already creating negative feedback on the economy, and we continue this path for the next 6 months, there's no way that Brexit will pass. The UK will stay in the Eurozone, and therefore British pound goes up because the news was so bad. Don't you love it? Yeah, we used to have non-farm payrolls like this where the number was so bad, it was great for the stock market. And you're like, what? We had this horrible non-farm payrolls. Why is the stock market rallying? Because the Fed will have to do quantitative easing. It's so bad. It's fabulous. Let's all get rich. Free money. Right? So, isn't that fundamental? Isn't that neat? Bad fundies, good for the pound because the pound won't leave the Eurozone. Now, how come you weren't in on that, Ryan, 1 second after the news? Come on! Anyways, hey, and who was criticizing me for being long euro dollar? Yeah, I remember. Mm-hmm. Yeah, that was yesterday. Anyways. Yeah, all right. So, as you know, I've had a bajillion technical problems this morning, so let me load a couple of charts. Another software update that ruins everything that works. Who updates these things, by the way? They're like, it's working really good. We should screw it all up. Someone has the title, right? What do you do? Oh, I'm senior manager in charge of screwing things up. Let's see. Let me get a... Well, let's start with this. Oh, I see. Yeah, Kat, you're saying, you mean the sound. Yeah, you know, yeah. All right. It's what's happened, Kat, is it's public domain music, so anyone can use it if they want. So anyways, hey, let me remind you that trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily... What? Let me start over again. Trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Okay, and that's the short version of the disclaimer that I said for years and years and years and years and years. Oh, Ryan says, what are your thoughts on oil going up in increased volumes? Is it possible that oil countries are buying oil and I don't know, Ryan. Not likely. Um, the interesting thing is, I am a student of oil, and I think I told you that my weekly reading assignment for this week was read 2,000 pages and then write a report. So I have a day by day perspective of oil prices going back to 1850. But here's my sort of take on the history of oil. Uh, it started out with basically, let's just say, big American oil companies. There's some, BP's in there and Royal Dutch Shell, but let's just say the big oil companies ruled the world for a very long time until about the 1960s, and they were just raped and pillaged everybody and threw some crumbs down as a thank you. But they kept oil prices low so that places like Europe could be rebuilt after World War II, Japan could be rebuilt after World War II, and the United States could expand, and Americans could buy appliances for their house. They can buy a car, and then, you know what, if you're going to have one car, you might as well have two cars, and then so on and so forth, right? And then plastic was invented, and all these things, and all of a sudden, boom, 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 and it's all energy and all oil, and it's all growing. But to pay for all this, or to help pay for this, the big oil companies kept oil really, really, really cheap. And if you're an oil exporting country, like Saudi Arabia or Venezuela, for two great examples, you got very little benefit. Basically, people took your oil and built other countries with it. And you got and not only did you get very little money, you got no respect. You were treated like a second class citizen, right? The oil men would come in with their $1,000 suits and, hey, Sheikh, get me a cup of coffee, dude. Right? And you're like, whoa, no respect. So obviously OPEC comes in here. It gets formed, and they take the power from the oil companies, and then OPEC's running the show for a very, very long time. In particular, because the United States hit full capacity, and suddenly they were completely dependent on other resources of oil because America just didn't have enough of its own oil, which was a big change back then, right? And then all of a sudden, the OPEC countries and other, not just OPEC, and it's not just them, but oil producing countries sort of went the same way as the oil companies. All of a sudden, they realized they were making money hand over fist. They were so unbelievably powerful. They were so unbelievably wealthy. And all of a sudden, arrogance takes over and mismanagement takes over, and the whole thing collapses. Now, the interesting thing is, if it wasn't for the OPEC embargo, right, in 1973, if it wasn't for that, the UK would not have pushed to build North Sea oil. And the North Sea oil suddenly had more oil than most Middle Eastern countries. Whoa! And Americans wouldn't have pushed their way into Alaska. They drilled, got nothing. 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 Got drilled, nothing. But they persisted because they had to, because they were so dependent on OPEC, which cut them off from supplies. Plus, suddenly, oil in Alaska, even if they found it, would be unbelievably expensive because of the logistics. But oil prices were up 400%, so now you could afford to drill, and there was a need to drill in Alaska. You could afford to drill in the North Sea, and you could afford to produce oil out of the North Sea, and all of a sudden, boom! Guess what? Now OPEC lost its control and its market share. And now, so on and so forth. Strategic reserves were created so that even if there was another oil weapon by OPEC, and the Western world was cut off from oil supplies, we'd have a backup. And And all of a sudden, we get this balance in power. But the thing is, the whole thing has been arrogance and mismanagement, but on both sides since day one. It's pretty interesting. And we're in the situation where we have way too much oil and nothing's likely to change for a very long time. No, but I'm talking all the way up to now, James. That's a 5-minute overview of the entire history of the oil market and a little bit of the geopolitics of it. But right now we have a lot of oil. And it is a revolution, and it is a change. For a very, very long time, the United States had way too much oil, and the oil prices stayed low for a very, very long time. Then we ran out of oil, and we lost control. But now we're in this situation where instead of chronic shortages, we have just way too much oil and the capacity to get more whenever we want it or need it. And on top of that, because now we're looking for tight oil and shale gas and all this kind of stuff, there's a lot of places on the planet that if we ran out of what we had, we could probably find some more. It's areas that we just thought were impossible suddenly is possible at the right price and all that kind of stuff, right? So if I was asked, are oil prices going to go back to like $75 or $80 or $100 a barrel? One thing that I think of when I do my reading is, when in 1973 oil was $3 a barrel, and when the embargo hit us at full force, oil skyrocketed all the way to $12 a barrel. Makes me kind of think like, why was it $150 a barrel, right? Maybe even $35 a barrel is too high. Because are we ever going to eat through this glut of oil? Like, when are we going to run out of oil, right? It might take Europe 5 years to come back online, but even then, we would have a lot of oil. So it's just what economists don't get, because when you do listen to Bloomberg or CNBC, here, hang on, let me go somewhere else. Let's pull up oil. It's amazing they don't seem to get. They discuss like why is the low oil prices hurting the American economy? They're like, it's a real conundrum, it's a real change, and there's discussions and debates about it on TV. And it's a really interesting thing because if you have an economics background, it's a fairly easy, elementary discussion. Americans were in debt, and oil prices come crashing down, gasoline prices at the pump come down. You don't spend as much as you used to, and Americans are saving the money. They're paying off their credit cards. They are spending money on things like experiences, so they'll go on a Disney cruise, but maybe they won't buy a new pair of jeans, which is interesting. But Americans are saving and paying down debt. We're over leveraged, have been for a long time. But what happens is the longer this lasts, okay? So how about, right? Like, how about this? If the government just simply said, here's $1,000, an economist would say, everyone's going to take that and put it in the bank. And they're going to say, thank you. You lower someone's taxes and say it's going to be like this forever, like at least 5, but probably 10 years. Your taxes will be lowered. You know what'll happen? You'll have a higher propensity to spend. And so the longer people realize that gasoline prices are low, are going to stay low, and this is the new normal, eventually they'll stop paying down their debt and they'll start spending, and they will buy, designer jeans, right? How, so that's what I'm trying to say, Warren. How about 10 years? How about 15 years? Okay. So the reason I say that is even if the demand curve increases, right? If the demand curve shifts, so more demand comes from the world, okay? Even if that happens, but let's ask the question, how long will it be until that actually happens? A significant increase in demand. That's got to be what? 5 years? 7 years? Right? How long did it take the United States to do quantitative easing 1, quantitative easing 2, Operation Twist, quantitative easing 3, to get to our 2% growth rate? I mean, how long did that take? 2000, what, 2008, 2009, 2010, 2011, 2012. That's about 5 or 6 years, right? And Europe just started, and they were not as aggressive. Americans have this personality of once you realize there's something wrong, take the medicine no matter how bitter it is, take it and take a lot of it and take it fast, and let's just move on. Europeans will delay, talk, smoke, drink some wine, right? The Japanese will just pretend it never happened because to admit you'd lose face. And if you lose face, you're like, yeah, we're in a recession, all of a sudden everyone's pulling out their swords. You're like, whoa, it's just a recession, right? So we all have different sort of personalities. But let's say Europe gets on board. If they did exactly what America did, maybe it's 5 years, but it might be 7, it might be 8, right? Don't you think, guys? So then that has to help China. So that means the Europeans not only need to get their economy going, need to get jobs, pay down their debt, and then they start spending and buying stuff, right? Like LG TVs from South Korea. They're going to buy, Bart Simpson T-shirt from China, so on and so forth, right? So not only does their economy need to recover, then they need to feel comfortable in their new job and their new income and pay down their savings so that they can say, you know what, the old TV, it has to go, right? So I know they're not in the Eurozone, but imagine you're in Poland, you're in Warsaw, and you're like, you know what, I can't take it anymore. I'm finally going to spend some zloty and get myself a big screen TV because this TV I've had for the last 10 years, ish kaput. I don't know, that's German. Like what makes that guy just say that's it? His new job, the job he's had for 2 years, the amount of money he's been saving. I mean, it takes a lot to say, you know what, I just can't do with this old TV anymore. Well, if you don't have a job, forget it. The old TV will do. Or if you're not sure your job will last that long, or maybe your job doesn't pay you that much. So you're not paying down your debt, you're just paying your bills. Well, then you're like, you know what, we'll make the TV last, right? So you see, like, the how the consumer needs to go through a process of, okay, now you're in Spain, okay? You're in Spain, it's 1,000% unemployment there. Oh, you finally got a job? Is it a good paying job? Is it a job or a career? And if you've had it, how long how long do you need to have the job before you feel like it's a stable job? And is it paying you enough money so that you can pay down your debts, pay down your credit cards, pay for the mortgage on the house that you lost? Because in Spain, they won't let you go bankrupt, right? And then at what point do you say, you know what, life's good, I'm making money, I got a great job, everything's, I can't live with a crappy TV, so I'm going to go out and buy a Samsung, send some money to Korea. It's a pretty long time, right? But then when that happens, then the South Koreans or the Chinese or the Japanese, let's just say Asia is a manufacturer of these types of things, then they need natural resources and they go to, they go to Canada, they go to Australia, they go to Brazil, so on and so forth to get the raw material, right? And all of a sudden new orders in South Africa hit and, some gold and iron ore or whatever needs to go there to Asia and Baltic Dry Index goes up. It's taken a while. So even then, finally, demand goes up. We have enough oil to meet demand. Even then, I think they would be closer to, we'd get sort of production better in line or in tune with oil, or with demand, right? So that will get away from this huge glut. But it's not like we're going to run out. Like, oh my gosh, what if we don't have enough oil? I think that'll be I think that may be a ways off now. Okay, so is it going back to 100? I don't think so. So, okay, let's just talk about Canada. Canada has oil sands. Venezuela has tar sands. Okay, unconventional oil supplies, right? At full demand, pre-crisis demand levels, we could live 150 years on those supplies. You just have to pay more. Well, if you don't have any alternatives, you'll pay the higher price. That's it. You need oil, there it is. More likely what will happen is we'll say, really? Because that's expensive, right? That's by the time it hits the market, that's $100 a barrel kind of stuff. Well, if we're going to do that, maybe solar will be better. Maybe wind or tide currents would be better. Maybe maybe nuclear will be better. Maybe thermal will be better. Maybe there'll be a better alternative. Especially when you add in the consequences of pollution and all these other things. We'll just say, you know what? We might have a lot of that tar sands in Venezuela, but maybe we just don't, we'll find something better. So long story short, and because I am taking what's happened in the oil market serious enough to focus this much on it, yeah, I want to make money from this. I'll be the first guy that ever went to Harvard and made money. They're all socialist pig dog liberals anyways. First capitalist ever come out of Harvard. So anyways, does oil prices have to go up? Like I said, to me, suddenly $30 oil doesn't seem very cheap. So let's go back to this scenario. Do you guys remember doing this? We had WTI going up to this area. Oh, snap. That's where we are now. Really? What about Tesla? Interesting. Does this have to go up? Is sort of the questioning here. And no, I don't think it has to go up at all. Right now, it doesn't say down. Okay, you would play the trend, most likely, right? On the shorter term, it is going to ride the 21. Most likely, it's going to ride the role reversal. But what you start doing is you start doing this, And usually you do this kind of stuff to measure buy zones, right? Come on, I'm just trying to move this. Man, why can't I move this? Sometimes when you put it right on price, there we go. All right, let's try to move it now. I usually do things like this as a measure of where I want to buy in the future. If I thought we were in a place where it could roll over and head down, I'm actually measuring it as a break. So, for example, what if, and again, I'm not suggesting it is, but let's say, what if we're looking at something like this in the near future? Okay. Steven says payback on solar energy very long, need efficient panels. Absolutely, and I do have a friend in that industry, and I've had long conversations with him. Very interesting stuff. And 1,000 years ago, which was like, I don't know when, I don't remember when I was a venture capitalist. 2004. I don't know. We were even looking at companies, or in that case, it wasn't even companies, products and patents, where you could go to a shanty town in Brazil or some lost world in Africa that runs off little Honda generators. Have you ever been to these shanty towns where they have perforated metal little tin shacks, little houses, and they want to watch a TV, so they have a little Honda generator running? Of course, the worst possible source of energy. The two worst sources of energy in the world: little Honda generators, two-stroke engines, and cooking stoves. Those cooking stoves are horrible for the environment. No joke. Like, they're one of the worst things for the environment. Go to a shanty town and look how they cook. Look at how they cook. It's horrible for the environment, but what you'll also see is it leads to things like poor diets, poor nutrition, poor, childhood development, and all that kind of stuff. If you go in and just give someone a propane, a little propane cooking stove, everything changes. It's amazing. Versus using, like, I don't know, burning manure, which half the world probably still burns manure, right? Um, but anyway, so we looked at this technology where you'd go into a city like that, just, the big shanty town, and you could go in and you would paint solar panels on. You just paint it on like black paint, and it's enough to power a TV. We didn't get it. We didn't get there. Um, but we did invest into paint that would change color depending on the time of day. And we licensed it to the military. So you could have a truck in the morning leave a military base, and it looks black, and it drives through the desert, and it's on its way to Baghdad. The sun starts to rise. It starts to get lighter and lighter. And at noon, it's the color of sand. And by the time it arrives at Baghdad at night, it's almost black again. Because I'm wick smart. No, yeah, no, I didn't invent it. We just put money into it. We just made money from it. That's all. So, anyways, I don't even know how we got there. So, zip, 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 maybe. And as a speculator here, I want to be ready. Okay, and my buy zone here, or in this case, sell zone, would be kind of in this area pointing down. Okay? I don't want to take the first shot. I want the break, pull back, and then the short. I'm studying finance, Bruno. It's like one of those things. If you have the opportunity, why not? Huh? Okay. Um, we talked about Pig Dog maybe 2 days ago, and we were sort of like in the get ready area. You don't see it here, right? If you're playing this, you're buying down cycles, right? You guys should know this. I teach you every day. But why not do this? Let me get my little drawing tool. You're in Nigeria, Eric? Nigeria has light, sweet crude. It's beautiful stuff. Okay. What am I looking at here? Zoop, zoop. Okay. Any of these? Zoop. I'll take the first one. Zoop. Okay. I'll take the first one. Didn't work out quite right, but zoop and zoop. Okay. This is a 5-minute chart. We do this on the daily chart, 4-hour chart, 1-hour chart, whatever. The most important is you need to make a decision based on longer term charts whether this is going up or down. And then you drop into a 5-minute and you putt, scalp, 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 trade, 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 whatever. Right? The rest is up to you. What I want to show you is you start with support and resistance. Okay. And there's zones, and especially on the 5-minute chart, you can't be too picky. Okay. But every time you make a higher high, so as you're just heading up here, you need to drag this across, and then ideally, you wait for the Stokes cross. Is it the Stokes cross? No. It's the old resistance becomes support. Support and resistance is always supreme. It's the most important thing to be looking for. Okay, this happens to be Kiwi. I thought it was going to be pound. I must have been trading this, but anyways, let's keep with it. Okay. Support and resistance identified first and foremost. Then, if you're near support and resistance, then you take the way oversold cycle, because if you're a bull, the market's mispriced when it's oversold. It's oversold in an uptrend. You buy it. Okay? Makes a new higher high, right? So when it's up here, you do things like, if it comes back, okay, you would like to buy it somewhere down there. Well, this was a big breakout, that kind of thing, so it didn't pull back as much. Oh well. But you see what happens when you don't have the support and resistance? It didn't move. Not like you thought. Right? So very difficult. All right. There needed to be something else going on to make that, dare I say, an easy trade, right? Okay, you see? Quality, less quality. But now you have a new higher high. So you're way up here. What you do is you say, if I come back to this area, it could be a buy. Okay? So you're long here, put your stop here. It was supposed to take off. It didn't. On the next one, it did. Notice it's London Open. Which one do you think is more important? Shanghai Open, London Open. Well, they both moved the market. Look at that. London Open. Okay. You're at support. Roll reversal. 5-minute kicker. Dip, 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 dip. You're up here. You take the old resistance, drag it across. You're hoping it becomes support. Hang on. That's too big. Let's do it this way. Need a 5-minute kicker. Chow. So you're up here. Drag this across. Is it oversold? What do you think? My charts have become full of indicators. I have a 5-8. All right, so you guys got a lot of conversation going on, which is cool. Right on. But can you see this? Is this a decent buy? I'd say you should be cautious. Okay? I'd be cautious. It should be down here. All right? So it might be developing this is the caution. Okay? So you got to be careful. So let it come down, let it do its thing, and maybe in a bit, right? So this was supposed to be pound dollar, but I clicked on the wrong one. I wanted to show you something on the pound dollar, but let's just stick with this. So Marina said, Marina, you said that my charts are full of indicators now? I'd like you to expand on that so I know. And if so, we can discuss them. It's the end of the world as we know it. So interesting that we were looking at this on a 5-minute chart with no real indicators. I think all there was a 5-8. Going into the New York Open, and wow, look at that. Okay, what happens typically to a trader? They make one trade, they make 25 pips. They make 2 trades. The second trade, they make 25 pips. They make 3 trades, they make 25 pips. And their fourth trade, they lose 50. Pretty typical, right? Yeah, well, Marina, when you see one, let me know and we can discuss it. Yeah, Joseph, I think I figured that out. The chat seems to be lagging by a minute or two, maybe. Yeah, it must be that stupid update. So this is one of these situations where on that 5-minute chart, we had the up, down, buy, up, down, buy, up, down, buy, up, down, Do you buy? And I'm thinking probably not. And someone else might miss this, especially if they're not using pivot points, right? And the thought process, and I actually wrote a magazine article about this, I don't know, 7 years ago. The difference between a good trader and a great trader is the great trader trades less and avoids, even though it's the same type of trade, the same 5 minute, roll reversal putting type strategy, they know when to not make that final trade. Okay? And the difference here is the great trader might trade less time, spends less time in the right, and makes 75 pips. And avoids 1 or 2 or 3 hours in front of the chart. They go and have a long lunch. At the end of the day, they walk away, let's say, with 75 pips on 3 trades. The other trader, how many pips do they make? They spend more time in front of the charts, and they walk away with 25 pips. Both are profitable. One makes 3 times more money, right? Makes 3 times more money and works less. Okay? Yeah, no, I get it. No, I get it. We're good. We're good. I saw the comment and I want to make sure I understood. That's all. You guys are important to me. I want to make sure I understand. So going back to the 5 minute chart, I'm going to need a little more before I take the chance and buy again, right? Or I may just walk away and just say, all right, 75 pips, good enough. I don't want to long this near the pivot point. It might go up. It doesn't matter because I already got my 75 pips. I don't want to give it back. Work more to have less money, right? So, so maybe now as a trader I say, well, I'm going to look for this here and see if it reverses at a reversal. So maybe I start shorting kind of there. And then I say, oh, well, that's going to take an hour and a half. Well, I'll go outside and smoke a cigar and I'll wait. And someone else that's just chasing, gives a lot back. So inevitably, if you're that type of trader that will take the first trade, the second trade, the third trade, not even recognize the risk here, take the fourth trade, lose 2/3 of your money, what are you going to do? Well, you're going to make this trade and that trade and make it up, and boom, boom, boom. You're going to work 8 hours, make 10 trades, and hopefully 60 or 70% of them are winners, and still maybe not get the 75 pips. Right? So, okay. All right, so this is going to be interesting. If you are able to be a bull, and you're not worried about that pivot point, you're gonna look at this. The upper pivot point. You're gonna play the lower pivot point. You're gonna take the Stokes and you're gonna drive it into the reversal pivot zone. What I'm trying to teach you is that's higher risk pips. Okay, and even if you buy it here, okay, let's say you do. You just buy it here, good. Once you get to here and above, each pip is less likely than the pip before. And that's called risk. You might make money, that's fine. You better have solid belief and probably reasoning why you think it should go beyond the target. Maybe you're like, Wayne, it's just daily pivots, I'm playing weekly pivots. Good, as long as you explain that to me. Okay? And you say, Wayne, I looked at it, I thought about it, I did the analysis, it's worth the risk. I think this is going up to the next level because of this, this, this. I'm like, boom, you nailed it. Great. I might totally disagree with you. Don't matter none. Okay? So I would rather you say, like, we're sitting around a table analyzing this as a group. Okay? And I say, what do you think here? I would like to hear that some people want to take it, some people don't want to take it, because every time I've done a poll where I ask a group of traders like us, like there's 100 and some people, right now, I could ask you about, like, should we sell the pound dollar or should we buy the pound dollar? It'll come out 50-50 every time. It's remarkable. It's absolutely remarkable. And I've done it many times over the years where I don't even ask anymore, and I know that that's how the foreign exchange market works. The bigger the market, the more likely we're, on the short term. On the long run, we could say, oh, well, we all want to sell euro. Okay, oh, great. Congratulations with that. But what do you want to do now, right? But I would at least like to say, as a group, when I ask about these pips we're staring at right now, that we say, well, there's a reasonable chance it could go up. The technical analysis is ready on the 5-minute chart. These are only daily pivots, but we all agree there's more risk associated with the up pips now than 2 hours ago, right? And then whatever you want to do with that knowledge, that's you, right? And that's good because your alpha is going to be different from my alpha, and that's your decision-making process. You might make pips in these situations because you're like, well, I'm a medium-term trader, Wayne. I don't use daily chart pivot points. I use weekly pivot points. Right on, brother. What is the outcome of the reversal? Well, if it reverses here, you have to look at the longer-term moving averages. Okay? What would a 15-minute trader do? Well, the thing with a 15-minute trader is you got to get through the 21. How are you going to get through the 21? Okay? And then when it gets to the 21, what happens? Okay? In fact, I'd almost assume a little bit higher and then down. And eventually, this chart is going to target not the 200 EMA now, but the 200 EMA in the future. So 67 maybe? Okay? So now you got to take this and say, all right, that's my analysis of the 15-minute chart. Then so you draw it. And you know how I leave myself little mementos by using, I'll draw things out with my trend drawing tool, and I'll draw the little lines. And then you go back to the 5-minute. And you say, all right, so on the 5-minute, it's going to go down, and then it's going to, let's say, 3-wave up, and then, down, and then it's going to, this will actually be the big 3-wave, and then this will have to expand down. Okay? And so you're like, okay, let's say 1 cycle down, 1 cycle up, 1 or 2 cycles down, 3 cycles up. Why? Because now, let me blow your mind even more. Why would I think that? Why would it go even higher? Because now you got to change the time frame to an hourly chart, and those guys are going to look at it like this. Okay? Down. And for them, they're going to want a 618, and then it's going to come down. So you got to say, all right, what's going to happen on the 60-minute? What's going to happen on the 15-minute? And therefore, I got, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I have 12 trades on the 5-minute chart. I might take them all, I might not, but those are 12 setups that I'm going to have over the course of today, the rest of the day. Okay. James says, what's your exact entry? 5.8 weighted. You know, the entry to me is almost the least important. Because it doesn't matter, just pull the trigger, right? Now, what I don't like to see is, and when I mentor people, we always start with the same thing where they're like, okay, I'm going to sell. They're like, Wayne, I'm going to sell here, right? And they pull the trigger here on the pivot, on the support. I'm like, what? I get this. But why did you sell here? Well, I had to wait for, I don't know. The moon was not in the right solar orbit. I only short when the tide's going out and not going in. I don't know. It's like, wow. So I only I rub my face, my eyes, because it's so, these things are difficult. What we need to do is sell high, right? So you sell retracements, and you sell cycles, right? You sell when the 5 minute is kind of like this, not like this, right? So if you had to, how do you pull the trigger on this one? Oh, this is a 1 minute chart. Let's not confuse it too much. Okay, whatever. You could do, find your resistance wherever you think that is. Wait for your oscillator. Do you pull the trigger because of the stochastic cross? Do you pull the trigger because of the 5.8 cross? Do you pull the trigger at the 3.82? As long as you think you're at resistance and it's already respected the resistance, then you need to pull the trigger. What's more foolhardy is pulling it late down here, and you're like, now I'm going to sell. Because then I'll just say, well, did you sell high or did you sell low? Did you sell at support or did you sell at resistance? Well, I needed the 5.8 cross on the 1 hour. Right? Isn't that the challenge a lot, guys? Why don't I ever use 30 minutes? It doesn't matter to me. Honestly, I don't care. Okay. Each individual chart, guys, is correct. If you want to use a 30-minute chart, use a 30-minute chart. See, none of that really matters. What matters is you say, I see the 4 hour and I see resistance, let's say. I don't know. Okay, just let's say top end of a zone, range, okay, whatever. You make a decision and you're like, oh, got some resistance up there with some pivot points and stuff. Oh, 4 hours elevated. I think somewhere in the next 12 hours, this will turn red. Okay, done. As simple as that, that's something that you're not doing. Okay, so I've opened up what's wrong with the 30-minute? Nothing. I'm not even looking at it. I'm still building a strategy. I'm not tactically looking for entry. I just say, well, you know what? Very often when this kind of thing is overbought, I start looking for resistance. Is this resistance? Is this resistance? Well, somewhere between here and here, this has a propensity in the past to roll over, like it did here, like it did here, like it did here, like it did here, as they say in the mother country, right? So is it possible this does this? I would ask you a question, but the chat lags like 2 minutes today. So thank you again for that upgrade, Adobe Air. So is there a propensity or possibility that this rolls over and falls? Yes. Okay. What's my job now as a speculator in the foreign exchange market? Prepare to sell. Should I pay attention to daily pivot points being in that zone? Yeah, let's see. Yeah, maybe. Could be important. Will it be important? I don't know. Could be. So I say, you know what? Maybe a strategy today or until early tomorrow, maybe I should look for signs of it rolling over and this thing drops for, this is a 4 hour, I don't know, 1 or 2 days. It looks like 1 or 2 day cycles. And we fall into this zone. All right. Yeah. Sounds like a plan. Hypotheses. Good. Hypotheses. What if it rolls over, and if it does, probably down there? Scientific methodology says we need to go out and find some data, find some evidence. Drop into the 1 hour. Wayne, can I use a 30-minute? Dude, if you want to use a 30-minute to analyze and get data and confirm or deny your hypotheses, please do. Back when I used the Dealbook 360 many years ago, many years ago, I used the 2 hour chart. I used the 3-minute chart. I am an expert at the 3-minute chart. I don't know if you ever known that. I'm like a samurai warrior with a 3-minute chart. Right? By the time you see my 3-minute chart, your trade's already dead. I killed it. Boom! So, but it doesn't, look, there's no secret in the chart. Doesn't matter. It's your analysis. So if you want to use a 30-minute chart to make a decision, you say, all right, okay, but this area here is only interesting because of what might be appearing on the 4 hour. If you thought this if we were in a zone for this, wouldn't this red candle just be sort of exactly what you would be expecting? Wouldn't that influence your thought process of, you know what? This is going to do that. Sweet. And then you say, oh, that's perfect. Now, it's probably confirmation bias, right? Friedrich Nietzsche, right? Perception creates reality. There you go. I threw in German philosophy. And of course, existentialism, right? It doesn't matter. We're all going to die anyway, so make some pips while you're still breathing. Okay, so maybe that comes down. Well, this starts folding into a plan on a 30-minute chart. Yeah, see, I don't care. 30-minute chart, 1 hour chart. The thing is that you're actually doing the process of analysis. Okay, Wayne, I like the 2 hour chart instead of the 4 hour chart. Yeah, me too. It's a hybrid of the 1 and the 4. It's kind of nice. It's a medium chart. MT4 doesn't do an easy job of that. I'm sure you can manipulate it through periodicity adjustments and stuff. I don't need it. Whatever. Just do your job. Do the analysis. Have an opinion, for crying out loud. See, where most people are failing is they're like, Wayne, I'm struggling with Forex. I'm not getting consistency. Sometimes I'm profitable, sometimes I'm not. And I'm like, well, what's your opinion on the Aussie dollar? I have no idea. Good. Give me $1,000. I just figured out what's wrong with you. So just do the analysis. Is this resistance or support? Well, if you think it's resistance, why are you buying it? Okay? If you're like, well, I think, Wayne, it's going to go higher up in here for this, that, and the other thing, good. Well, then you need to make a decision. Are you going to buy in daily resistance? Because there's no doubt that is daily resistance. We're not going to debate it. There are pivots there. You might not like pivots. Somebody likes pivots. From what I've seen, there's a reasonable amount of people in the world using pivot points. Case in point, yesterday's low, M2. Yesterday's high, exactly the target. Done. That's pivot point theory, M2 to M4. Went right into the projected high and then stopped. That's where we closed. Coincidence? I don't know. That was just yesterday. I don't know. Maybe a coincidence. I'm just picking the last data set. Happened to be perfect. So somebody's using pivot points. Okay, so it's going to be resistance. Whether it's going to be resistance for the week is no one knows. But you need to put this thought process in. Do you want to be long dollar going into non-farm payrolls tomorrow or short dollar? It's a pretty basic question. Do you think we're going to have a bad non-farm payrolls or a good non-farm payrolls? It's going to be fine. somewhere between 190 and 210. Is that going to increase the dollar, weaken the dollar? What if it's a good number? What if it's 220? You know what they're going to say? Today they say there's zero chance the Fed's going to raise interest rates. And all of a sudden they're going to say, wow, look at that, the Fed, blah, blah, interest rates. Look at the June, right? They're not likely to do the MAR meeting, but the June meeting. Oct is going to jump, right? The September-October meeting will jump, when you're looking at Fed Fund futures, right? And all of a sudden, the dollar's strong and the whole world's changed. And I'm like, yeah, well, you could have shorted right here at the pivot point. More importantly, it's not the pivot point. It's the fact that you may have analyzed this as a resistance zone in which a down cycle could be born. What does it look like when it's born? That's why you use a smaller time frame. Is this the birth of a reversal? And is it the whole thing going to occur on this chart? No, on this chart, you're probably going to see, let's say, maybe a down to the 21, and for some reason, a breach of the 21. What would that look like on a 1-minute chart? Is it on a 1-minute chart? Is it going to go like 1, 2, 3, red, boom, up, down? Is that what that's going to look like, guys? No. Because it's also going to move in a wave fashion, right? It's going to go 1, 2, 3, 4, 5, 3-wave correction, 1, 2, 3, 4, like this way, and then it's going to go 1, right? And on this chart, it's just going to look like a 618 Fibonacci retracement. From this low to that would be about a 618, and then down to the future, okay, on that chart. And now you're starting to line things up. And you're like, oh, okay. And by then, maybe the 4-hour will be oversold, and then maybe down in here, and then maybe in that, and then maybe it goes up to the higher level, and so on and so forth. Okay? Okay, news. Yes, news is important. News is risk. Okay? News is risk. A mix of short, medium, and long-term trades are important to help mitigate this risk. So, for example, I fought an Aussie yen trade for quite some time. If you remember, I was up 300 pips, and then only up 200 pips, and then I was up 300 pips, but then up only 200 pips. So I had to short in some scenarios to hedge, indirectly hedge. And then it looked like it was going to fail for a third time. And I decided, well, I made 100 pips down and 200 pips up. I got my 300. I've never actually lost anything from my peak to valley. But it looks like it wants to fall again. And I don't know if fall means retracement or reversal. But 3 failed attempts to break seems like it could be risky. So I bailed on that. Okay? Short-term shorts, so I just scalped 50 pips at a time. I did it in the Asian session, by the way. Someone was saying the other day you can't make money in the Asian session. Right? Those were just little 50 pip scalps on the Shanghai Open. And I did it while I was mentoring. I'm like, hey, what do you think of this? That looks good. Boom. Took the shot. Boom. Okay? Hedged that risk, but I got out because of uncertainty. Great. Trying to make a logic, intelligent decision. And now, if I'd stayed in, I would have been closer to the 500 pips. I remember I said I'd be embarrassed not to get 700 to 1,000 out of it. Remember, it all set up. And we talked about the actual entry. Okay, I'm looking at it down here because that's where I made my analysis. And it all started with double bottoms and Stoke cycles on dailies and 4 hours. Remember the 4-hour setup, the daily setup. So I bought a cycle around, and then it went up and hit 21 EMA resistance on daily and got rejected, did it again, got rejected. So I'm hedging. I'm doing all this management, but it's short-term short, long-term long, paying attention to moving averages on multiple time frames and stochastic cycles on multiple time frames and trying to pair up, all of that, right? If you only do 15-minute type chart trades, if you're only in your 25 to 50 pip trades, you're going to be vulnerable to news events, because remember, the markets move on news, not just individual events, though. Fundamental analysis is not news trading. Okay? And I've gone way too long, so I need to wrap this up. But here's the secret to the sauce here. This is the secret sauce. Central banks manage monetary policy. Monetary policy is in response to macro and microeconomics. The data that they look at is provided by private and public organizations to come up with things like CPI, PCE, GDP, NFP, so on and so forth, retail sales, okay, consumer spending, consumer confidence, just all of that goes into the data so that the central bank knows how to manage the monetary policy for the economy. Now, it just so happens that that data is available publicly, and it comes out, a week, daily. We look at Baltic Dry Index daily. We get weekly jobs report, right? Unemployment claims. We get monthly stuff like non-farm payrolls. We get quarterly stuff like GDP. We get like twice a year stuff if you want to count it, like from like IMF, right? And all this data is public. And as it comes out, it's new information, and you need to add it to the data set if you're doing fundamentals. Now, in each individual news event, so, initial jobless claims came out, right? Challenger report came out today. They can move the market because that's new information. And someone might say, oh, did you see that number? That points to a good non-farm payrolls, right? Right? Not many mass layoffs by Challenger report. Good non-farm payrolls. Boom, trade. But that doesn't last forever. It's just new information available to the market. Some people want to scalp that. Some people want to hedge it. Some people might say, well, I thought we were going to have a bad non-farm payrolls. That says good non-farm payrolls. Maybe I need to get out. And other people will say, well, that's just wrong because, I'm looking at the trend and not the one month layoffs, so they're going to do something else. And people start adjusting their portfolios, putting money in the game, taking money out of the game. How is that going to affect your trade that you're going to be in for 2 hours? I don't know. It might make you some pips. It might lose you some pips. I don't know, right? I mean, who would have thought, right? Like Ryan said, bad PMI out of the UK and the pound gets strong? Oh, yeah, well, if you know blah, 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 obvious. But you're like, well, that's not that obvious, but that's a... If you have a portfolio versus just a position, then it balances that risk because most of the trends are long. Okay, the volatility kills you if you're only short-term trader, 1 or 2 trades at a time. Okay, imagine you had 100 trades open. Look at your daily chart on the yen pairs. I pointed this out to you actually 2 or 3 days ago, I think. It might have been last week, it might have been Monday, can't remember. And then even before that, a month ago. The yens look like they're cycling up. That's why I bring up that Aussie yen idea, because I've explained it to you. We went over it, how to get in, how to manage the risk, how to manage the trade, how to make the decisions, right? But remember, it was CAD yen long, Aussie yen long, Kiwi yen long. I think pound yen wasn't there. I think euro yen might have been there. But very interesting, right? And how these things start to cycle around, technically and fundamentally. Okay? And so wouldn't it be nice if you had some trades on for the long term, stops at break even, of course, some trades on for the medium term, like let's say you buy on Monday, you sell on Friday, that kind of stuff. And you're also day trading. And sometimes news comes out, makes you money. Sometimes news comes out and takes your money. But maybe 70% of the time, it's a winner, okay? But ideally, if you hang with me long enough, or I mentor you or something, we get you in that situation where you're not just a one-hit wonder every single day, right? But that you're starting to build positions, portfolios, opinions, right? And you become a well-rounded trader. Because like I've shown you day after day after day, I'll trade the 5-minute chart like I trade the 4-hour chart. It doesn't matter to me. The difference is the fact that I'm going through a thought process and I say, well, if this is going to go down, up, down, how's the other chart going to behave to fulfill that? Because it's also going to want to go up, down, right? Sorry, down, up, down. But it's going to have an opportunity to do it more often because it's a smaller time frame. But if I zoom out on that 5-minute, let's say, and I zoom out and zoom out and zoom out, so my candles basically just look like a line chart, what's it going to look like? Down, up, down. Simple chaos theory and fractal geometry. And a little Newtonian physics in there. And then if you want to throw in Nietzsche, it always sounds good. It always sounds good to mention, you know, German existentialists. Doesn't hurt anyways. So anyways, got to go, man. I look at the time. But there is that the birth of a reversal? I don't know. That's your alpha, baby. At least we talked about it before it happened. Peace on earth. May the pips be with you. May your profits be above average. I'll see you tomorrow, FX Street, where I am Speaker of the Year. I'll see you at FX Street tomorrow for non-farm payrolls. Boom, 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 boom. I'm gonna hit them. Hit them hard. Fire for effect. See you tomorrow.